Now, the federal government in its latest report notes that Nigeria's non-oil sector recorded some growth as it exported products worth $2.593 billion in the first half of this year. Now, data from the Nigerian Export Promotion Council also shows that this represents about a 62% increase from the $1.59 billion worth, which was exported within the same period just last year. And given a breakdown of the non-oil products that were exported, over 200 different products ranging from manufactured, semi-processed, and solid minerals to raw agricultural products were reported to have been exported in the period under review. And according to the report as well, manufactured products accounted for about 36.28% of the non-oil exports, while raw agriculture products with about 33.35% and precious stones with about 13.22% followed respectively. Now, out of all of these top 15 exported products in the first half of this year fiscal period, we have urea, which recorded about 32.49% of the total export, while we also have cocoa beans coming in second, sesame seed and aluminium contributing about 12.65%, 7%, and also 5.07% respectively. Well, joining me now virtually to discuss some of these burning issues affecting the non-oil export base here in the country, I have Dr. Chijioke Ikechukwu, the Managing Director and Chief Executive Officer of Dignity Finance Limited. Thank you very much for joining us on the show today, Dr. Ikechukwu.
Thank you very much.
Now, let's start this conversation really now, having some retrospective look at how the non-oil sector has performed from the peak of COVID-19 pandemic till date, where we are still reeling from the disruptions from the Russia-Ukraine crisis. There's been a resilience which, to say the least, has been much more than average. The annual contribution we've seen from the non-oil sector increased to 92.76% from last year, from 2020 to 2021, which was the height of the COVID-19 period. Now, with your experience at the Abuja Chamber of Commerce and Industry at the helm of affairs as former DG, when bodies like the Network of Practicing Non-Oil Exporters of Nigeria call on the federal government to embark on an aggressive drive to strengthen the local base for increased intra-regional African trade to effectively diversify the Nigerian economy, what does this really mean? And what are some of the missing links that still persist, mitigating any chance of us truly diversifying our economy?
For many years, we have always advocated for growth in the non-oil sector. Everybody that has spoken as economists or as analysts has been talking about diversification of our economy. And the fastest and best way to diversify economy would only be to make sure that other sectors grow as well, like the oil sector. So the growth by 62.37% in the non-oil sector is a welcome development. And to also identify that this kind of growth was actually driven by manufacturing sector leading. Of course, you already mentioned the fertilizer and the urea products. That is just where it is more exciting to us as Nigerians, meaning that there is hope always. Once our real sector continues to manufacture, we will have enough for the local market and we'll have enough for export market. And you know, many times it is just for our manufacturers to know that the best time to export is when your local currency is devalued. In fact, many countries devalue their currency just for them to grow exports. And so here, our currency is devalued by other factors, and so it's a very good time to export in order for us to have very good value for our money. So this is a very welcome development, especially as it's coming from the manufacturing sector. That also tells you that assuming we have even up to 50% more of manufacturing sector producing up to optimum capacity, we're going to be having enough for the market and we're going to have enough for export. Unfortunately, when you also look at the number of companies that generated this percentage growth, we had only 572 companies that did this out of the population of Nigeria, that will tell you that we still have a very, very big gap to be filled by manufacturing sector. And so the more we manufacture, the more we have enough for local market, and the more we have enough for export. So this is a welcome development, and all we need to do is just to grow on this and ensure that we are growing year on year. When compared to 2021, you see that we have grown. And so we are also expecting that by this same time, next year, we are going to be comparing and measure the kind of growth. Of course, so this is welcome, honestly.
Dr. Ikechukwu, let's also smell the coffee, because really now the Russia-Ukraine crisis is throwing one of the biggest curveballs we have to deal with. We had to maneuver through the COVID-19 pandemic, and within a short while, a space of less than a year, we are also dealing with the Russia-Ukraine crisis. Let's now talk more about the expected roles at subnational and national levels, expectations as well from bodies like the Nigerian Export Import Bank, interventions from the Central Bank of Nigeria, and also the African Development Bank. One of the missing links, I would say, here in the country is the fact that we have an implementation deficit when it comes to tracking and following the money, and also access to credit. Not enough is done. That's one school of thought. But it's not enough to have all of these fantastic interventions on paper. They will be flawed just because some school of thought believe we don't just work with data here and haven't not necessarily built the culture of consistent checks and balances. This poses a major problem for us, irrespective of how much of an intervention we have. Do you share this thought?
Yeah, I do share this thought, because we have intervened in many spheres and in all frontiers of our export market, and in fact in our manufacturing sector. But you see that we haven't had deliberate effort by the necessary agencies and government to promote export. We have been intervening, but we need to be deliberate about the expected result of the level of interventions we have made so far. And nobody's measuring the extent the intervention is achieving, the extent of success is achieving. So we need to deliberately put more effort into exports and grow from month to month, from quarter to quarter, and measure the level of growth we're encountering. And in doing so, there has to be a whole lot of leeways given to exporters in many forms. In other words, the Import-Export Bank has to make access to such funds, their funds, very easy. The BOI has to they must make sure their funds are made easy to be accessed, and many other institutions that actually provided funds for this. That we haven't been able to get so far. Where we expect that somebody accessing such funds must have a collateral. That makes it a little more difficult, and certain contributions you're supposed to make to equity before you are given such funds also makes it a little more difficult. So we need to lower the requirements of some of these funds in order for us to have access to them. Nigerians are willing. Nigerians are resilient people. Nigerians are willing to manufacture, and the access to the marketplace is being provided by the Nigerian Export Processing Council. And so we need to take advantage of the kind of access that they are giving us. So we know that access to funding is a major problem still up to today. And but so far, so good. We have to keep growing gradually. Before now, we are not exporting as much. So we need to actually gradually grow our local capacities, because if you're not producing, you can't export. You only produce and have enough before you start exporting. So we need to first of all grow our local capacities and grow our real sector so that they can produce enough for the local market and for the export market. That way, we have to continue to grow our export base, and over time, our balance of trade will be easy enough and balancing themselves, and probably one day we'll start having a positive balance of payments. This will be to the advantage of our economic growth.
Dr. Ikechukwu, I share in your optimism, but we also have to face one reality here. The cost of production in the country is really one stifling element. We have to deal with production and infrastructure challenges within the logistics supply chain, and also transport and a whole lot more. Let's also have your analysis of the free trade zones and government's drive towards creation of hubs where we have shared resources and also waste management. In your earlier take, you made mention of sharing this optimism, but do you think we have any chance at cutting the cost of production, which already puts us in a disadvantage point, especially where we're looking at conversations around the African Continental Free Trade Area Agreement and also building a much more robust state as the giant of Africa that we ought to mimic?
Yeah, in the short run, you and I know that cost of production has doubled in all sectors. And in fact, I took it for granted that it's already known, and it's a known fact that that's already existing. And that's why I talked about the resilience of Nigerians. The cost of production is that which is throwing many manufacturers out of business. And you see a lot of factories shutting down because they can no longer cope with the cost of producing these items. And the cost is competing with imported goods. Don't forget that when your cost is so high and the same goods are imported from outside the country, there's no way you can compete with them. And that is actually what is affecting some of the automotive companies today. That's what is affecting the tire companies that we ever had before now, and the Michelin tires, the Dunlop tires, and of course the assembly plants that we're supposed to have in this country today because of the cost of production. You know, when I talked about being deliberate means there are so many actions that can be taken by government. Have we thought about having any kind of industrial park that can contain, say, companies in automobile, companies in electronics, you know, different parts, and providing certain facilities that will be shared by these people in order for them to have lower cost of production? You know, we haven't started with any of those efforts, and until we start with those efforts, then we cannot see ourselves as being deliberate. You know, so we need to continue to target what we want to achieve in terms of production and productivity, in order for us to also target what we expect to achieve in export. Right now, as it is, any manufacturing company that is still existing and is still producing and still selling its products and still keeping its staff should be given awards, because this is the most difficult period for any manufacturing company to exist. So I agree that it is difficult for people to exist as manufacturing companies right now, even as companies, you know, that have life to exist, you know, because a whole lot of things are affecting us adversely. We all know where the inflation rate is. We know what the exchange rate is saying today. We also know the cost of production arising from the cost of diesel, and all these things are all the vices that are facing us. The headwinds are too many, and we are dealing with them. That's why I say in the short run, it is the most difficult period to do business. Let us hope that sometime in the future, when certain things start changing economically, we are going to have better positions by these manufacturing companies.
Well, for the most of business and other enterprises here in the country, they cannot necessarily hold on to that hope, because for the fact that we have inflation already well above 19%, the projection is that this would even supersede the 20% benchmark we are expecting by the close of this year. We're barely just halfway through the year. But in terms of new waivers now, what are your expectations as we speak today? Because when you look at trade within the Eurozone and the industrialization agenda, waivers are the way to go. Now we have a government here that's looking on taxing, looking at new taxes to bring on board. Rather, what's happening in advanced clients is we are seeing bigger slashes and cuts. Do you think we have any chance at also adopting this sort of measure and not shoot ourselves in the foot?
Okay, you know, it's always wrong for government to adopt certain economic policies by some developed countries, because the economic environment and the business environment of these countries are not the same with ours. For example, if you adopt an economic policy by the Western world, they don't suffer the kind of insecurity we have today that is bedeviling us. They don't suffer the kind of hike in exchange rates increase we have today. They don't suffer a whole lot of things that we're suffering. So it is always good to have economic policy and economic decisions that will suit our system. Having said that, as the business environment gets rougher, manufacturing companies and business people, we need to think about so many things. If we were used to importing a lot of our raw materials we have to think about backward integration and think of which of our raw materials we can source locally. If there are other ways we can even merge with some other companies in order to share some infrastructural facilities and reduce our costs, that we can do. So we have to do everything to ensure that all the things that we need to depend on coming from outside the country in terms of importation, we can look elsewhere within the country to see whether we can source them, and in order for us to depend less on foreign currency. You know, there are many devices to take, many strategies to take, depending on what kind of issues that are affecting your own production. Otherwise, we take them case by case, depending on the various companies and wherever they're located. That is just how it should be. So the management team of these companies should sit down and decide, identify all the issues and all the problems they have, and start looking for alternative sources to solve all the problems they have. That's my take.
Dr. Ikechukwu, let's also look at the role of research and also standardization. We are yet to get to that point where value addition plays a critical point in our production and processing base. And we also have to look at this whole agenda of automation of our port processes. How do you see the shape-ups take place, especially for the fact that we have mitigating challenges that have persisted or lingered for far too long a time and have become new normals?
Yeah, the problems with our ports have lingered for a reasonable number of years. And as we are solving one, another complication comes. I remember when we used to have traffic jam around the port area and along the express roads leading to the port and out. As if we were trying to solve that problem, some other ones came around. So you see that whether you're importing goods or you're exporting them, you are having unnecessary delays that can actually add to your cost and that can reduce your ability to deliver on your promise. These are the problems that we are having. There are so many of them, you know, and the more we don't give them attention, the more they continue to affect our GDP. You can imagine where we would have been today if most of the problems we identified by government are attended to. You know, many of them exist. Many of them exist. And so if we don't have a concerned system that will look at some of these problems, they will continue to affect our problems. But as far as we can use a lot of technology to solve most of these problems, that will also help us. You know, so most of the problems that we're having today could actually be solved with technology. And so we need to look at them and look at the possibilities of solving some of these problems in order for us to reduce the burden of doing business in Nigeria. I know government has said a lot about ease of doing business, but for today, I can tell you that is still on paper. We're not still there. We're not even moving. It looks like we're on handbrake on that ease of doing business. So we need to look at every item that has been stated on ease of doing business. When we talk about ease of doing business, many times they talk about one-stop shop where you register company, but that is just far from it. There are many other issues associated with ease of doing business. So we need to be serious about what we preach on paper, and we need to actually be committed to all of them. Right now, they are still on paper, I can tell you.
Okay, Dr. Ikechukwu, we are wrapping up our conversation now. Playing pundit, do you think we'll still see these players, the cocoa beans, sesame seeds, and also aluminium, take the top spot by the time we close the year 2022? And how, because you missed that as well with my question, how do you think research would also help up to prop up the base of these production that we would see here in the country?
You know, we have actually been having research institutions in this country. They have been there working and researching every day, churning out their findings to us to take advantage of. You know how long IITA has existed in this place. You know, there are many research organizations that are here giving us the outcomes of their research works. The issue is, are we taking advantage of the outcomes and the findings from these research institutions? Many times they beg for the various people to institutions to take advantage of the findings they have, and nobody's approaching them for it. They're not being compensated. They're not you know, people are not taking advantage of the findings. The issue is not whether there is research or not. The issue is, even when the research is out, is the environment enabled enough for businesses to grow and for businesses to thrive? If these environments are not enabled, which you know that they're not enabled, assuming there are the best research findings concerning how to grow the best agricultural output, what do you do with it if the environment does not even allow you to go farm? What do you do with it if the environment does not give you access to funding? What do you do with it if there is one government policy that will just kill it and something else will jeopardize all the plans you already have? So I don't think research is the issue because we already have enough research institutions. We need to have a very good enabling environment to do business. We don't have that yet. And we pray that someday in the future, that's why I said in the future, someday in the future, we'll get to that point.
You're such a big optimist there, and then someday we hope we'll get it right. But right now we have the 2023 elections also gradually building momentum. Electioneering activities are already taking center stage, and hopefully we have a team that clearly understands what the state of the economy is and what would be required to prop up the level of growth we'll see in the economy. Thank you so much for spending your afternoon with us, Dr. Chijioke Ikechukwu. We've been speaking with the Managing Director and Chief Executive Officer of Dignity Finance. Thank you once again for your time on the show today.
Thank you very much. Always my pleasure. Thank you.